Hi everyone, welcome to my channel Let's Talk. Today I'm going to talk about an Indian multi-bagger stock in the gold business, which transformed itself from a simple watchmaker to now a multinational retailer with strong presence in the discretionary product categories such as jewelry, watches and eye care. It is India's leading organized jewelry player, backed by one of the most trusted conglomerate in India, the Tata Group. It is in operations for 4 long decades since 1984. It is quite popular and trusted under one of its renowned brand named Tanishq. I'm sure by now most of you must have guessed which company I'm talking about. Well, let's talk Titan. Titan has now evolved into a lifestyle product company targeting the middle to upper middle class consumers. By business segment, jewelry is the leading vertical, close to 89% of revenues, followed by watches at 7%, and remaining contribution comes from eye care, fragrances, accessories, and Indian wear. Titan has successfully created a diversified portfolio of brands that cater to the varying needs of consumers at different price points. To name a few of the popular jewelry brands in luxury and premium category are brands like Zoya, Tanishq, and Mia. The company also has a strong online presence with its e-commerce platform CaratLane. The omni-channel strategy allows Titan to cater to customers with different shopping preference modes. Titan has an extensive retail distribution network comprising of 2,500 plus stores spread across 3.2 million square feet in 406 towns. Titan's first international store expansion was in 2021 in UAE and has recently entered the US market with its first store in New Jersey in December 2022, with a focus on expansion in high Indian population strata. Overall, the international division has 6 stores, including 5 in UAE. Titan's retail expansion story is rationalized and very strategic. It focuses on key regions where it has lower market share than its national average. This strategy has helped Titan gain share, particularly in southern and eastern India. Now let's talk about the jewelry business. 74% of Titan's sale comes from gold jewelry, while the remaining 26% is from diamond-studded jewelry. An interesting point to note here is that despite the increasing gold prices over the years, Titan has a robust business strategy with gold exchange schemes for consumers. The Golden Harvest is one such scheme which allows individuals to deposit a sum of money every month for 10 or 6 months, which can be redeemed against a jewelry purchase subject to a special consumer discount for a percentage depending on the amount deposited on the maturity of scheme. This is how Titan sources 40% of its gold inventory, while the remaining 60% is leased for the business. In the coming years, Titan is the leading listed player to benefit from the structural change in the jewelry industry from non-branded to branded shift in this market. Based on the company's estimate, it has huge headroom to capture market share with only 7% currently. This higher market share gain will be driven by e-commerce channel sales, strong retail expansion with Titan targeting over 600 stores in the next 3 years. The mandatory hallmarking of gold jewelry will also aid in narrowing the gap between non-branded and branded business margins, shift towards Titan as an organized player. Additionally, emerging businesses such as watches, wearables, and eye care, where Titan has invested capital, will boost sales in future, benefiting from existing resources and infrastructure. Overall, Titan has projected and is on path to achieve a 2.5x increase in sales with a 20% yearly growth rate in revenue compared to 2022, as we can see it in 2027. Now quickly look at the Titan's share price, which is currently trading at 2,573 rupees, a 5% increase, 1-year increase. As a long-term investor, the 5-year return for Titan are solid at 173% and 10-year return are significant at close to 950%, outperforming both Gold Reliance Mutual Fund and Nifty 50's return. The company has a solid shareholding promoter pattern with holding of Tata and Tidco of more than 50% of company share. An interesting fun fact here, Titan is now the second largest Tata-owned company by market cap in Indian stock market. Titan has experienced significant growth in sales and net income over the past 5 years, with sales growing at a CAGR of 17% and net income growing at a CAGR of 25%. The company has a strong balance sheet with increasing equity, nearly zero long-term debt, and low short-term 1-year debt as compared to the robust total cash balance of 10 billion as of September 2022. Total assets have grown at a CAGR of 20%. While cash flow from operations is currently volatile and negative due to high working capital operating leverage, it is expected to sustain a positive growth momentum with further growth in operations on sustainable basis, driven by economies of scale, operational efficiency, consistently increasing sales and thereby building equity. It has now become a prominent brand in India and will continue to be a key beneficiary of the shift from non-branded to branded product preference in Indian consumers. Overall, higher market share gains in coming years, increasing revenue with solid company projected growth rate of 20% CAGR in next 5 years, extensive retail network expansion strategy, higher traction on the e-commerce platform, strong balance sheet with nearly zero long-term debt, thereby supporting higher cash flow and profitability in the future. And as an added bonus, being part of Tata Group continues to add credibility and trust to the business. This definitely makes Titan a long-term let's talk option to consider in your portfolio. Do let me know in the comments below what are your thoughts on Titan and if you want me to research on any other stock. Do subscribe to my channel and follow for more such content.